JJ the CPA here, a quick update here on April 1st for the PPP situation. So they announced that the interest rate will be 0.5%. So when the PPP came out, they indicated that it would be a 4% loan on what was not forgiven. So you're gonna get the money now. What you don't use for qualified expenses during the covered period, okay, which watch my other videos to know what are qualified expenses and what's the covered period, then you owe what you got out of the program. You owe that back. But the interest rate on that is 0.5%, okay? So don't me get it wrong. When you go to sign these documents, it's not gonna say your rate is 0.5% because you're just getting money. It's just a program. When you finish up spending the money and you now are showing what you spent it on and figuring out how much is forgivable, and at that time it becomes a loan if not all of it got forgiven, okay? Then when it becomes a loan, it becomes a loan at 5%. So it's April 1st, 2020. April 1st, 2020, and we're talking about the PPP. So this video won't apply very long, but when we're on April 1st, if you've got expenses coming up, and if you're applying for a PPP loan here on Friday and you're gonna have your money Monday or Tuesday, I've got some clients that are like, I don't really have any money to pay rent or utilities. Should I wait for the PPP? And the short answer is yes, because like rent and utilities and payroll and health insurance and telephone and internet and the employer match, I mean, those are all part of qualified expenses. And so if you're days away from getting the PPP and you don't really have the money to pay it, then, when you get the PPP money, use it to pay for that because that's what it's for. And if you're getting ready to pay it and then you get your PPP money 4 days from now, well, you kind of wasted being able to include something that you're meant to be able to include. There's been talk about that maybe the covered period is more than 8 weeks and is it June 30? And the answer is no. What you need to know here is that you can only get money through the PPP program if it's still available through June 30th, okay? So when you see, well, it's through June 30, that's how long you can get it, okay? Once you get it, you have 8 weeks from approval to get it spent. Be sure you're keeping your receipts, okay? Because remember at the tail end, you're gonna have to show what you spent it on, and if it was qualified, then how much of it's forgivable. But you're gonna need check copies and you're gonna need receipts. So as you're spending this stuff, make copies of the checks. You're gonna need bank statements. When you're paying that utility bill, make a copy of it, okay? Because you're trying to substantiate. You're gonna go into your bank and you're gonna have to make your case and prove without a shadow of a doubt, doesn't matter if it's your best friend and you guys grew up each other and you just totally trust each other, it doesn't matter. They're gonna need the documentation. So as soon as you get your money, let's see, on the tax credits, something to keep in mind that once you have PPP money, that's for payroll. That's why you're getting it. Hence, Paychecks Protection Program. Okay, so while you're in the process of spending your PPP money, okay, if you're paying employees that are out and they otherwise qualify for you to get a tax credit, right? We know about these 4 tax credits. See my other videos on that. But you're not using your own money to pay those employees if you're getting money from PPP. Therefore, the wages that you pay to employees where you would otherwise get a tax credit for that, you won't because you're spending PPP money, okay? They gave you the money, you're paying your employees, you don't get a credit on top of that. In fact, you don't get to deduct those wages for tax purposes because you're not gonna recognize the income on the PPP money. Okay, and then I'm still getting questions on the EIDL. Bottom line on the EIDL is that it's not structured to get both, period. The EIDL was in existence before the PPP came into play, and it is through the SBA at the SBA website. You can't get an EIDL through the bank. The bank is where you get the PPP and the bank only. There's now just a rush of inquiry. Well, can I get the EIDL and the PPP? Well, I mean, you can, okay? But if you got the EIDL, you need to reduce down how much you're getting for the PPP. If you get the EIDL and you have the PPP and you reduce it, okay, it's a double slap, because the amount that you got from the EIDL, okay, even if it was forgivable, even if it was you don't have to pay back the EIDL, you guaranteed that the amount of the PPP that you got from the EIDL to be unforgivable, okay? Let me just say that more in plain English. Whatever you get from the EIDL reduces down the PPP. Whatever you got from the EIDL also guarantees the amount of your PPP that will not be forgiven, okay? They're not meant to be taken together, okay? I've gotten texts, and this isn't a game, okay? This is not a game of, oh, I found a way to do it. You can't. It's not how it works, so don't do it. All right, Form 941s, you're gonna need those. I've got another video where I'm talking about it. Column 1, line 5C is the number that you're gonna wanna get off those Form 941s to figure out your payroll, your hardcore payroll cost. You will not, okay, I'm a leprechaun in front of you that's actually 3 inches tall if this is true, okay? It is not true that health insurance is in your payroll. It is not true that you'll find the health insurance on a 941. It is not. Any payroll that includes health insurance is not employer paid and therefore doesn't count. The only health insurance that counts is what the employer paid. It specifically states in the law, because that's what I read, is the only portion of health insurance that is included is the employer portion that the employee did not pay, okay? So you're not gonna find your health insurance on your 941, and if you're being told that it's in there, you're losing out on money for the PPP. It's not included. Last thing, if you're an owner of the company and you paid yourself wages, you get to include those wages up to $100,000, okay? Whatever wages you have, okay, no matter who it is, those wages count up to $100,000 per employee, okay? And now if you're a small business and you got 3 employees and 1 owner, and the owner's paying the health insurance on themselves, and these 3 employees either don't need it or they got it elsewhere or whatever the case is, that health insurance is included, period, the end. All right? All right, that's our update for 4.1. JJ the CPA, out.